What is your financial independence number? Do you know what it is? Do you even know what a financial independence number is? According to the FIRE community, which made the financial independence number quite a bit more popular than it was before, the financial independence number is the number of dollars that you need to accumulate in order to be able to retire and live the rest of your life on the amount of money that you've accumulated, on the interest, on the dividends, on basically just on whatever that amount of money is going to produce for you. It'll produce sufficient for you to be able to live. And the idea is to be able to live indefinitely just on the interest that you're earning from the amount of money that you've got invested. The FIRE community actually purports, and I believe this is true, that retirement doesn't necessarily have to be an age. It's literally a number. So whatever age you are, once you achieve this financial independence number, you can have the opportunity to retire. Welcome to the channel. My name is Paris Clough, and this is Financial Self-Reliance. I absolutely love helping people manage, protect, and grow their money. And in this video, that's exactly what we're going to do. So I'm going to share with you the easiest way to calculate a financial independence number. And then you can take this calculation and you can go and find out what your number is. Let's just say, for an example, that you wanted to have $50,000 a year in retirement, or $50,000 a year is what you spend now in all of your expenses to live the lifestyle that you have right now. So you would take whatever that number is. I just used 50,000. So whatever your number is, if it's 25,000, 30,000, 100,000, whatever your number is of the expenses that you need in order to live a comfortable life at your lifestyle for a year, that's the number that you use in this calculation. So you'll take whatever that number is, and I'm going to use the example of $50,000. So let's say that $50,000 is the amount that you need to spend every year in order to live your lifestyle, and then you multiply that by 25. Now the idea is that if you accumulate that amount of money, in this case $1.25 million, you're going to have sufficient to be able to live on that money for at least 30 years without ever even having to have that money be reduced. Now the idea behind accumulating this amount of money is that even if it didn't gain any interest, you could live off this amount of money for at least 30 years. But assuming that it continues to earn interest, you could literally live off of the interest at 4 or 5% and then never run out of money. And so this is why the financial independence number is so important, because it gives you the opportunity to know exactly how much money you need to accumulate to be able to live the lifestyle you're living now, but do that without having to work the 9 to 5 or whatever it is that you're doing right now to be able to make the income that you're making. If you're not satisfied with your current work or career, this will give you the opportunity to retire from that and do something that you're more that you find more enjoyable, or do something else to make money that would bring you more value, more joy, and more happiness. So in this particular calculation, it gives us the amount of money that we have to accumulate, but it doesn't tell us how to accumulate that money. It doesn't tell us where to invest our money to be able to accumulate that money. It doesn't even tell us how much money we need to put away each month in order to get to that dollar amount. So this is a good starting point, but there's a few things that we'll get into right now. And then at the end of this video, I'll share with you where I'm putting my money to save towards my financial independence number. So let's take a look at this calculator that I created. What I've done in this calculator is I've created a calculator that will calculate the amount of money that I need to put aside every month on a monthly basis in order to get to a goal. So let's say that right now I'm 25 years old and I want to retire at age 65, which is basically retiring on time. So I have 40 years to retirement. Well, assuming an inflation rate of 2.5%, and right now I know it's much higher than that, it's like 7 or 8%, but over the long term, over a 40-year term, the average for the last 40 years has been about 2.5%, 3%. So I feel comfortable in using that as in this calculation. So if I wanted to have $50,000 a year, which basically what I did is I took 50,000 and divided by 12, and that's about $4,100 a month. So $4,175 a month. What amount of money would I need to save in order to have a balance or have a dollar amount coming to me that was $4,175 a month? And what the financial independence number doesn't necessarily take into consideration, unfortunately, is inflation. So although that $1.25 million is a good starting point, the reality is that with inflation involved and a 40-year time frame, you're going to need to actually accumulate a lot more money than that in order to be able to buy what that amount of money will buy in today's dollars. So basically, you'll need to set aside $963.34 every month, earning 8%, in order for you to obtain your goal of having an amount of money accumulated to be able to live off of $4,175 a month. Now, let's just assume for a minute that Social Security will be around at some point or at some level. Let's just say that that's a couple $1,000s of that. Well, now you don't have to accumulate so much money because Social Security will take care of some of the $4,175 that you need. So there's some things to consider that I won't get into in this video. I'm just giving you a basic overview of what is a financial independence number, what is the reality of what you need to do every month and where you can invest that money in order to obtain your financial independence number, and then give you the hope and strength to find places where you can actually start doing it and get started today. In fact, I'm going to show you right now one of the places that I chose to build my financial independence number is M1 Finance. M1 Finance is a fantastic program. It's a free trading app, and you can get online. It's an app on your phone as well, and it allows you to set up pies. So this right here is a pie. So my portfolio is a pie, and then each pie has a slice. So I have the slices over here, and you can see that I have a dividend ETF pie, I have indexes pie, I have a REITs or a real estate investment trust pie, I have growth stocks pie, slice, pardon me, and I have an ARK investment ETFs slice, and I have an M1 rewards slice. So I'm going to share with you what each of those slices are, but the reality is that M1 Finance is got a promotion going right now that if you were to join M1 Finance using the referral link in the description below, you'll actually get $50 free. And I don't really know where you can go and put $100 into an account and get $50 free. That's pretty awesome. So click the link in the description below, set up your M1 Finance account, and get $50 for free. So let me share with you really quickly why I use M1 Finance to build towards my financial independence number. One of the reasons why is because I can literally set this up to put money into the market at whatever interval I want. Right now I'm doing $100 a week, and what it does is it will put my $100 into my pie. And then what I do over here is I have each slice of the pie given a percentage. So whenever I put $100 in, 24% goes into this pie, 25 to this pie, 24 to this pie, 9 to this pie, 9 to this pie, and 9 to this pie over here. So it evenly distributes my investment dollars, so I don't have to worry about it. And what's also really neat about it is that I can buy fractional shares. So it can, whatever my dollar amount is, it'll buy whatever amount of shares that dollar amount will allow. And it's an absolutely awesome, super easy platform in order for you to be able to just put money aside every month or every week or whatever interval you can, and just know that it's going to do what it's supposed to do and just going to grow. Now, most people in a financial independence number or accumulation phase are going to use just an index fund. And the most popular index funds, let's take a look and see here which ones I've chosen. So I have VOO, VTI, VXUS, and QQQ. Now VOO and VTI are kind of the ones that you would pick most often. That's why I have 35% of this particular pie. So each slice breaks down to its own pie, and then within the slice you have slices as well. So this one has the ability, this one puts 35% into this one, 35 to here, and then 15 into each of these ones. And I chose to have 4 different pies because I wanted to have a little bit of international exposure. And then of course QQQ is the NASDAQ, and that's worth having some exposure on that, although it's down right now. So this is probably the most premier opportunity for you to be able to invest money. If you don't want to pick individual stocks, and if you don't want to know, you don't want to do all the research and the analytics, then you literally can pick one of these indexes like a VTI or VOO and then just literally set it and forget it. Put money in that, and over time the money will continue to do what it's supposed to do. And the average in this particular fund here, although right now you can see it's 2%, the average over the long term has been 8 to 9 to 10%, because the S&P 500, as you can see right here, is 8.87% is my return. The S&P 500 is averaged between 8 and 10% for decades. So if you put money into that, you're pretty much going to be safe that it's going to do what it's supposed to do, and it's going to grow at a really strong pace. And specifically the pace that we talked about in the calculator that I used on that spreadsheet that talked about having an 8% rate of return. The higher the rate of return, the better, of course, but to know that you can get an 8% rate of return is really fantastic. So in my M1 Finance portfolio, I picked a bunch of other things because I really want to use this as my ETF fund and my ETF building thing. So this last week, I'm going to show with you over here, click the activity and go to the morning trades. So as of the recording of this video this morning, I had some trades. So I bought 6 different shares. I put $12 into eBay, $8 into UPS, $24 into Home Depot, $55 into Walgreens, $3.58 went to Amazon, and $16 went to FedEx. And those are some of the shares and stocks that I have in my M1 rewards pie slice. So let me tell you what that is, because that's really cool. So this is over here. M1 is trying to be a broad financial product services company. So what that means is they have a checking account, they have an investment account, they have a credit card, they have a debit card. They have a lot of really good perks and a lot of really good things that they're doing to be able to provide some great financial resources to their clients. And I've taken advantage of all of them. So in this particular situation, if you come over here to this account, and this is the credit card, you can see that there's rewards. rewards. And the rewards are you can earn a percentage back, cash back, based on where you buy certain things. So if you own some shares of a stock and you go to that store and you buy or use this card to buy, you'll get a certain percent back of cash back in that particular store. So for example, the M1 Finance credit card, if you go buy AMC theaters and you own AMC in your M1 portfolio, you'll get 10% back as you buy anything from AMC theaters. Down here, if you do BP, which is gas, Chevron, Texaco. So if you own any of the shares of this stock in your M1 portfolio and you use this credit card at the pump, you're going to get a 5% cash back. I don't know where you're going to get 5% cash back on gas these days, and that's really important and really powerful. So I highly recommend that you take time to take a look at the M1 Finance app. It's a great place that once you've calculated your financial independence number, to come back and start investing in that in your portfolio. You can create a very simple portfolio where it's just the indexes and maybe a couple stocks that you think you might want to be involved in. And then what you do is you just set it up to transfer that money in every week or every month or whatever interval you want to be able to make sure that you hit your goals so that you can retire on time and with enough money to make it last. Once again, your financial independence number is the number of dollars you need to accumulate in order to retire. And that doesn't necessarily mean you have to hit it by a certain age. Once you hit that dollar amount, you should be able to retire. I hope you got a lot out of this video. If you missed the last video that I produced, you can go ahead and watch it here. Subscribe to the channel up here and take a look at this video that YouTube thinks you might like. Thank you so much for watching, and I look forward to seeing you on the next one.